welcome to another episode of Investment Time with the Twins.
In this series, we talk about the main stock market questions and learning opportunities that we share with our subscribers.
So let's start. The first question that we will be covering in this episode would be with regards to, the ways that we do research for a company before we pull the trigger and start to invest in a company.
Yeah, so how I go about researching a company involves a number of steps. It involves looking into the fundamentals of the company, fully understanding what the company does, which business they are in, as well as knowing their competition. But from there, once I have had a good understanding of the company and the business, and I kind of decide that this is the business and company that I'm interested in, I will then continue to conduct more of a technical analysis. And this involves really looking into the details of the stock as well as the fundamentals of the company from a numbers and finance perspectives. There are a number of metrics that really are interesting for me, and the ones that I really always look into. The first and perhaps one of the most common metrics when it comes to analyzing companies is actually their price to earnings ratio. So this is a metric that tells you the value of the stock and whether it is overvalued or undervalued. And in analyzing the PE ratio, it's also important to compare it to the company's sector, because depending on which industry the company is actually in, there might be a different standard in terms of the average price to earnings ratio out there. Just to give you an example, Amazon, which is in the online retail business, typically their price to earnings ratio is much higher. And if you look at the businesses within the same domain for online commerce, they have a much higher price to earnings ratio, whereas for banks, especially most recently, they have a much lower price to earnings ratio, currently sitting closer to, I believe, 12 in terms of the sector median. So that's one of the key metrics that I look at. The other metrics that I look at is in terms of the revenue growth as well as income growth. So to me, if a company is on the right track and has the right fundamentals, it is important for them that year over year, as well as ideally quarter over quarter, they show a consistent growth in terms of both their income and revenue. Now, understandably, some businesses might be seasonal, so you might not always see growth from quarter to quarter, but year over year, typically you would hope to see that, unless, of course, there is a rationale behind. Maybe there is a year that, like the recent year that we are in, the market has been hit so hard, the economy has been, in fact, been hit so hard due to the recent pandemic, and as a result of that, it's understandable that many businesses might actually be earning less and the revenue might have been also impacted. Nonetheless, the income and revenue growth is two of the other metrics that I look at. Moving on, I also am interested in the balance sheet of the company. So when I talk about balance sheet, there are a number of pieces that are quite crucial to me. One is in terms of their company's net assets, as well as their current assets, as well as their total assets, as well as the company's liabilities, both in terms of the current liabilities and total liabilities. So when we talk about the current assets as well as current liabilities, we're talking about their assets and liabilities over the past 12 months. So there are some metrics in there. There's a metric called current ratio, which divides your current assets by your current liabilities. And ideally, you would like to see a company where they have more current assets versus current liabilities. So it's a positive thing that you own more than you owe actually to other businesses or banks. So that's definitely another metric that I look at. Lastly, if it's a dividend paying stock, it is also important for you to take a look at a couple of metrics here. One is, of course, understanding what their dividend yield is for that dividend paying stock. But most importantly, in my eyes, is the payout ratio. For dividend paying stocks, the dividend payout ratio is a metric of how much of their earnings the company is actually using to pay out the dividend. So you don't want to see a very, very high dividend payout ratio, because that's not a healthy sign for a company. Typically for dividend paying stocks, as long as they are not real estate investment trusts, so for almost any other type of stocks, when it comes to businesses, you don't want to see any payout ratio over, I would say, 60 or 65% at max. Ideally, if the payout ratio is lower and yet the dividend yield is decent, that shows that this company has a lot more room for growth when it comes to improving their dividend. So these are the key metrics that matter to me when analyzing stock and a business before I invest in that. How about yourself?
These are all very important metrics and criteria to look at. For me as well, I would often be looking at a combination of the technical analysis as well as the fundamental analysis. But I would say the most important factor for me, first of all, would be in terms of having a good understanding in terms of the nature of the business, what it does. So I wouldn't be investing in a company regardless of how good the fundamentals are or how good the technical analysis indicate the business is, unless I really have a good understanding of what the business does. And it's important to me because that way, if anything goes wrong, at least I will have a better understanding of what has potentially caused that. In terms of the fundamental analysis, there are a couple of areas that I would be looking at. One of them would be looking at the balance sheet. As you said, Mo, I think it's very important to ensure that the business has enough capital and enough, especially current assets, to be able to pay off any debts that they might have. That would ensure that if interest rates, for instance, go up, they would still have enough cash to cover the pending interests that the company has to cover. On the other hand, if I'm interested in getting dividends from the company, another area that I would be looking at, it would be in terms of whether they've got enough cash to be able to support that. I think it's also very important to compare apple with apple and orange with orange. In other words, what I mean is important to put into perspective where the company stands as opposed to the average of the industry or the sector that they belong to. So it's always crucial to look into those metrics with that perspective in mind. The other thing which I would be looking at would also be in terms of their earning per share growth and their revenue growth over the years. It's very important for me to invest in a company that has been constantly growing over the past couple of years and has maintained that good trend and momentum. All right, when it comes to the technical analysis, I would also be looking at a couple which are more important to me. One in particular would be looking at the MACD, and the other one would be in terms of the RSI. And the reason why these are important to me is because it actually tells me whether the stock itself is within a normal trading range or whether it's overbought or oversold, and in terms of the bullishness or whether it's in a bear zone, so to speak. So by looking at some of those metrics and having a better understanding of the momentum of the stock, I guess I would then make a more informed decision. And in saying all of these, I guess it's important to also look at some of the reputable sources that are available to you. In particular, for me, I will be relying on the research done by Thomson Reuters. I would also keep an eye on the estimates, price target estimates, and research done by Zacks, because I think these are some of the reputable sources that are freely available to us, and it's important to take advantage of them and use them before deciding to do any investment. In a way, when it comes to the technical analysis, the other metric that it's my cat.
That's okay.